And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to Coach's Playbook. There is an elevator coming up my condo right now, so you might hear my dog howl for a few seconds. It happened right as we were going live. But you know what? I'm not going to let that affect me. Hello, everyone. We got a great topic today. We're going to share our tips and sort of process for trading the first half hour or so of the futures market open, specifically in equities is probably what we'll be looking at. Hoag's going to bust out the charts. And if we have some time later, we might talk about the release of a few other CME products, a little product update, if you will. And some of them are doing better than others, let's say. So to get things started today, though, trader shout out, Mick, who we got?
A couple shout outs. So before we hopped on, I was going to do a shout out to Jay Chang, still going to. He was up 4,200 about moments ago, still up 2,500, but position has kind of gone against him a little bit. So top of the board today, Milady Leal Gonzalez up 4,200. Shout out to you and you as well, Jay.
Yeah, hope that works out. So time to get started here. Hoag, you've been teaching a few classes right now, trading strategies and the like, where some of the topics we discuss involve the opening range. I know Dan likes to talk about settles and stuff like that. So I was thinking maybe you could kick us off today and kind of go through what you think right at the open and how that informs your trades or whether you trade, because that's an important question.
Well, it is an important question because for a long time, I found the first half hour or hour of trade to be the most challenging of the trading day. Not that all trading day isn't challenging. So you're going to find, opportunities that occur later on in the session because you get an idea of the range that the market is setting up for that session. So I do think that it's challenging, particularly challenging to trade early in the session. You don't know any kind of range that's going to get set up. So you're really looking at the information from past the previous day and the previous days. And of course, the daily and the weekly and the monthly, of course, are always part of the equation and part of the hypothesis. So one of the most important things that I notice prior to the regular trading hour open, and of course, we are talking about the regular trading hour open here. We're not talking about the overnight session or anything like that. Is where is the market? Where is price in regards to or in relation to the range from the previous day? Is it in the middle of the previous day? Is it at one of the extremes or even outside of the previous day? And then does it look like there's a large amount of overnight inventory piled up either to the long side or to the short side? Should I jump into the charts now, or should we do that in a little bit? Because I got a couple of good examples of overnight inventory adjustments and then a couple of shots of where I would be more likely to be in the market earlier than later.
Well, let's fire it up in a minute. First, I kind of wanted to go out there and say, people, if you're just getting started, might be thinking futures trade 23 hours a day, 22 and a half. Why the opens earlier? Like, why is the opening of regular trading hours important? Well, because if you're a big player, right, if you have a ton of inventory that you need to buy or sell or something, you don't want to do that in an illiquid market. And during the overnight session, you'll notice if you look at your price ladders, there's a lot less liquidity. And basically, unless you absolutely have to, you don't want to be doing your orders into that. Now, when the market, we've all agreed that this market open time, liquidity piles in, and now the big players are getting stuff done. So that's good information to have. So Hoag, you can take it away, and just remember to tell Holden if you want to put up the charts.
Okay, well, a couple of kind of fine points that we can discuss now. So yeah, we'll put up the charts here. I'll give it a couple of seconds here and get that going. Hang on just a second. Okay. So here is the market market forecast screen here, right? So here's the 30-minute E-mini S&P chart. So, and let's look at it here. What did I do? Here we go. Here we go. So
These
speaking,
guys obviously never shared charts on a
yeah,
YouTube video.
I know. I thought I had it set up, but apparently I screwed that up too. So, so this was Friday's regular trading hour session. If you want to see the liquidity in the regular trading hour session, look at the volume bars on a 30-minute chart. This is the overnight. This is regular trading hours. The vast majority of volume is trading during the old regular trading hours or the old days.
Yes. And that also comes into play how we talk about, the best times to trade. If you can, I mean, trade when you can, obviously, but we talk about the morning and then the end of the day. And you can see how it follows that pattern every day without fail. Big volume in the morning, unless there's some sort of exogenous news event, that's what your liquidity is going to look like.
Right. So yes. Yeah. Sometimes, depending on the product like gold, sometimes you'll see some pretty good activity before the regular trading hours. Of course, in some of the currencies like the euro and the British pound, they're trading it at 2:00 in the morning. So you're going to see a little bit more volume, but the US based traders are trading during regular US trading hours. So here's an example. This was Friday's range and profile. Sunday night, the market opened here. It traded a little bit higher and then trended lower all day long. It trended lower towards an important inflection level, like the weekly kickoff level. When we opened on Monday morning, we were trading the low end of the range from Friday. We were trading near an important inflection level. And then on top of that, the opening range, which is the first hour of trade, was left at the bottom of the range. And it remained the bottom of the range throughout the entire session. Now, here's a kind of a different platform that I'm going to show you how it's explained, how it shows on this platform. This gold bar right here on T4 represents the first minute of trade. To me, that's the opening range. When the market opens away from value or away from the previous day's range, I look for opportunities earlier in the session. When the market opens, and this is today's profile, leaves the opening range at the high of the session, but the opening range is in the middle of the previous day's range and value. Better trade locations are likely to come as the day goes on. The market looks lower, continues to check lower. The best trade location today so far has been at this level because it traded all the way down here, all the way back up through the opening range and to a point up here in yesterday's range for some reason. Now, if you're looking to find that opening range on the TS Trader platform, I'm going to go to the crude oil here because I already have it set up. If you choose a 1 minute chart, then you're going to add the Tiki opening range. Set it like this. This is 8:00 open for 1 minute. Okay. And save it. It's going to point out to you and in real time where the opening range is. So the opening range was, well, let's just say 85.46 up to 85.77. Initially, it looked above, but was unable to hold price above that. They came out and took out the low of the opening range, and we've seen what's happened through the rest of the session. The market has moved lower. So sometimes the opening range can give you a good idea or a good example, a good hint that buyers or sellers are going to be in control right off the open. Now, One caveat to the opening range trade. I'm going to go back to screen here in just a second, Holden. So one big caveat to the opening range trade is a lot of people are looking at it. A lot of people notice it. Some people say the opening range is 30 seconds. Some people say the opening range is 3 minutes. Some say 5 minutes. I say 1 minute. It's what works for me. If there's somebody that wants to get a bunch of stuff done in the first, right on the open, I think 1 minute is plenty of time, especially with electronic trading. So, the problem with it is that a lot of people are looking at it and a lot of people are trading at it. The more people that respond to the opening range trade, the less likely it is to succeed. So you're going to be able to look back on your charts and you're going to see, like in the S&Ps, periods of time where the opening range remains one extreme or the other 8 out of 10 days. When short time frame traders notice that, they all jump into it and they're going to wreck it. So you'll find there's going to be a period of time where the opening range trade does not provide opportunity. It could be for 2 weeks, 3 weeks, 4 weeks. But as soon as everybody abandons it and it puts itself into the right situation, that is out of range, out of value, you're gonna see it happen a little bit more. The beautiful thing about it is if the opening range is very small, it's almost no risk, and some of your opportunities can be huge. Yesterday, I think the opening range was 4 points. We saw the market leave that opening range and close at the other extreme of the range from that day. And yesterday's range was 65 points. So you risked 5 to make 60 if you held that trade the whole day.
Yeah,
beautiful opportunities.
Good profile there. One of the few times you'll see Hogue pulling out the 1 minute chart too. We've talked a lot about that. So Dan, we'll get you into the ball game here. Either more about the opening range or what are you looking at in the first, say, half hour of the day besides that?
In terms of opening range, that's really Hogue's area. That's not something I'm paying a ton of attention to, obviously keeping an eye on it. So in regards to opening range, I'll just say ditto to Hogue. We'll just copy and paste that one for my end of the lecture. But we'll keep it short. Really, for me, when I'm sitting down in the morning, and most people know this, the first thing I'm looking at, where is settlement price and where's the market in regards to settlement price? That's my biggest been my bread and butter for years and years and years. It's truly looking at if the market's away from settlement price, do we have an opportunity to close the gap? Hogue, please mind the gap. I'm looking for that market to see if we can close the gap towards settlement price. If we're a decent amount away and there's no fundamentals that are telling me it's going to continue in the direction it is, we got an opportunity to rotate back inside. Obviously, value areas are really important. Overnight highs and lows, prior day high and low, and prior week high and low. If I'm finding myself kind of in those areas, the market's away from settlement, I'm really looking for that market to move back to settlement price. And there's a couple of reasons why. And this is where one thing I want to touch on, and then I'll pass it off. But I've been asked a million times, why is settlement price really important? And I used to ask this question all the time. A couple of my mentors, why do you keep telling me to look at settlement price? And their feedback was always, just don't ask questions. Sometimes you don't need an answer. But I don't like that. I've really racked my head around it. And it really comes down to, right, settlement price is where position traders are basing off their P&Ls. Prior day settlement price is where they run P&Ls, and throughout the day, throughout their trading, that's what they're looking at. And so depending on inventory and things of that nature, if they're net short or net long and the market's going against them, they may want to see that market work its way back towards settlement price to potentially get back in the money on opportunities. So settlement price is really an important level for bigger position traders, and they're looking to see that market potentially rotate back towards it if against. Yeah. One of the many reasons, but to me, that's what I'm going to look for in the beginning of the day, the beginning of any trading session for myself. Where's settlement price? Where's the market in regards to that? And what are some of those key levels around it?
Well, it's one of those completely irrational things when you think about it, but I get what you're saying. Is I knew a lot of people, I used to do this sometimes too, that would you could change prices in your P&L monitor. And I would, if I had a big position that had like wacky settles, I would change the price to wherever I thought it was actually trading at the end of the day. The reason being, it's completely psychological. But if you got really good settles on a big position, you come in the next day and you're to be showing down a lot of money. And like, I don't know, it shouldn't make any difference. It's not real, but suddenly, you know, when you're looking at a big red number, it can affect the way you trade. So, Mick, want to send over to you if you had anything as far as kind of how you start your day, trading wise.
Yeah, trading wise. So to the opening range point, I mean, I agree with John. I think the opening range is the first minute that the equity is open. Myself personally, you know, trading the open for really any product is not for me. You know, I'm a small little fish in an ocean. I'm trying to ride the coattails of the big boys and girls and you know, see an opportunity and let the aggressive buying and selling, you know, push the market in my favor. As far as the opening minute, you know, and I'm thinking this most specifically about equities, that might be the opening range, but I'm sitting on my hands for the first 15 minutes of the day. I like 15 minutes to establish the opening range. And it's the first 15 minutes of, you know, after the stocks open at 8:30 a.m. Central Time, 9:30 Eastern Time. However, during that time, there's so much going on. There's a lot of money flowing in and out of the markets. Aside of the opening range, I like looking at seeing where we're at 7 a.m. Eastern time. This is something, a time where you will start to see the volume increase for the day ahead of the stock market opening. It's when participants come in. You can just, if you look at a 5-minute chart and pull up the volume, 7 a.m. is kind of that time when that happens, 7 a.m. Central. And I really like that because, you know, it's 8 o'clock in New York at that time. And, you know, getting a feel of where this money is starting to trickle in and push the markets. And then, you know, an hour after that 7 a.m. reading, I like getting a feel for, you know, where are we at and what I consider, you know, kind of the first hour, granted it being ahead of the stocks. And, you know, I'm curious to know if we're up or down from that 7 a.m. number. And then, you know, I was thinking about it when Danny was talking about settlement prices. Depending on where we're at after that 7 a.m. reading, or even after the opening range, I want to be very conscious of the previous day's high and the previous day's low. And I know Danny and I feel differently. I respect his, you know, most important price point of the day is settlement. I think the two most important price points of the day are the previous day's high and previous day's low. Those are the two levels where you're going to find out if we're going to get range expansion to the upside or the downside, or if we're going to test it and, you know, retrace back. If you look at any daily chart out there, it's very rare to have a day where the daily bar is inside the previous day's bar. They happen. We call those inside days. But if you look, you see a lot of tests of previous day's highs and lows. And I think that creates an opportunity to take a play based off of whether it be the opening range or the 7 a.m. number and see where or 7 a.m. price and see where we're at after that.
Yeah. And to go back to something that I think Hogue and Dan both mentioned, it's not always, maybe with the opening range trade, Hogue mentioned that a lot of people are looking at that, which makes it difficult. That's not necessarily always true with all indicators. I think one of the reasons that, like, and I'm not the biggest technical guy in the world, but why technical analysis isn't complete voodoo is because people believe in it. And I've made this point before, but that's kind of where you can find those asymmetric opportunities. If you think, I mean, everyone on earth is looking at the 50 and 200-day moving average for these things, but because everyone is, or those big fat numbers, say like 4,000 on the ES, because everyone's looking at it, there's going to be action there, right? And there's your chance to, you know, pick. We can't know what's going to happen in advance, but you can pick a side and you can have a stop that's much less than what you stand to make, right? So be aware of these things.
Yeah, cheap trades, as John calls those.
Cheap trades are great. I like cheap trades, but you said something about, you know, a technical analysis not being voodoo because people believe in it. Well, isn't that what makes voodoo work? Is that people believe in it, right?
Yeah, exactly.
Mick,
it's also factual data, you know, and
things that have
fundamentals play out in the technicals, that kind of thing. It's someone took risk at those prices.
Mick, I wanted to ask you, because you're a floor guy, your dad is a floor guy, he was a broker, you've been on the trading floor. Dan, you've been on the trading floor. your view of looking at the market, where it is at 7:00 a.m. Central to where it is at 8:00 a.m. Central, does that liken to the opening call? Remember, everybody was always asking for the opening call.
Yeah, I think those opening calls were, based off of the order quantities at certain prices to generate where, the market, the bid and offer was going to match up once the bell opened based off of the previous day's settlement.
And you can see that actually move if you watch the opening call over time.
Yeah, I don't view that as like the opening range play. That's just me. I mean, I was pretty young when the floor was rocking and rolling and I was seeing those, and I just thought of it as, okay, this is where the paper is, matching up. Not so much where, we're going to find ourselves after the opening range kind of thing.
Great.
It was a little different in the options world, treasury options. There's no talk about an opening range over in an option side of the pit. So that was something I had to learn on my own outside of the floor world.
Floor world, man. The benefits. I never got a chance to participate.
Can I show one more thing on screen on one of the charts?
Yeah, for sure.
It's gonna kind of go right along with what Dan says and what we were talking about with overnight inventory. So 3, 2, 1, bang. So this was Sunday night. This was Monday. This was Monday. This was Friday. I'm sorry. This was Sunday night. Price kept moving away from settlement to the downside. When the market opened, all of these overnight shorts got a little bit nervous and said, okay, we're not going to see this market continue down in downward. We're going to start losing money. So what's the first thing they did? They started buying it and they brought price right back to settlement, which is this blue line right here. Sometimes sometimes you can really plan your day on it, especially when they move price to an important inflection level like they did Sunday night. Monday, they said, all right, we're out. We're getting back to settlement.
Yeah. Also a collective sigh of relief. You see kind of like stuck around there of the people that were able to cover and lock in those, what Dan talked about when that's the thing. Like when that red print or something gets back to zero, for instance, like I'd get out. It doesn't make sense, but it happens. Cool. That's a good example there, Hogue.
All right. I'm going back to the regular screen.
Yeah. And
I think that's just a great area when you look at things like that, right? Like Mick's talking about prior day high and low. Those are his key levels, his most important levels that he's looking at. And to me, settlement price, that's where I base a lot of my starting my day off of. And I'm not against prior day highs and lows and overnight highs and lows. Those are some of the places I'm looking at all day long. But when you start to see these markets set up at those levels, and when there's a trade or an opportunity that you're looking for of like closing the gap back to settlement price, and then you're opening up at those lows like we saw, that to me is a prime example. Lock in a good opportunity, be done by 9:30 in the morning. Go home, call it a day, take a nap.
Stuff. I have one more sort of closing question here. Kind of move on to a different topic, like what we were talking about earlier, where on our Slack channel, Mick was discussing how the NASDAQ volatility future is not having a lot of liquidity. So the CME releases futures products from time to time. And like any artist, sometimes they are club bangers and sometimes they wither away. For instance, they, last couple of years released the micros. Those have been great. I'm sure they're very happy with that. But I was going to ask all of you if there's any other products that you would like to see or that you'd like to get rid of. So Mick, you mentioned the NASDAQ thing. Is there anything else you'd like to see, or what would you get rid of?
Get me on the spot here. I hadn't really thought about it. I think all the products that get added, there's a real need for them. Remember, these futures products are set up for the producers and the users to hedge their stuff. Micro's been fantastic. You open up a product that a lot of people look at to the retail community, and low barriers to entry. So you're going to get participation there. We were talking NASDAQ volatility futures this morning. I thought that contract was going to be, great. Jack, you had some different opinions on that based off of alternative ways to, profit from volatility. But I was saying, and I know we had a lot of our own traders asking about that, are you going to offer it? And anytime a product comes out, we'll look at it. We want to see if there's good volume and participation there to allow people to trade for it. This NASDAQ volatility index never got off the ground. And I was looking at my quote board today. I'm like, oh, why is that one product, gray instead of green as far as, it being active? And I noticed that the last time they traded a contract in there was back on the 16th of September. They traded 10 contracts that day. There's been no trading activity ever since. So I think that one's going to be dead in the water. And as far as new ones, I think I remember seeing an email from the CME. Hogue, it sounds like they might be bringing back lumber futures.
They should. I mean, think about the volatility there's been in lumber for the last year or two.
Yeah.
I think that would be helpful.
Yeah, give these guys an opportunity to protect themselves from that. But there have been a lot of products. I mean, you think of the Chicago Mercantile Exchange started as the Chicago Butter and Egg Board. We've traded everything from eggs to potatoes.
I say we bring back the onion.
Yeah,
onions.
Dan, you stole it. Like, we will talk about the
Jack, I've been sitting on it. I didn't want someone to steal the onion futures from me. For those that don't know, there's actually like the Onion Futures Act. I couldn't say when it was, but like years and years and years ago, some traders cornered this whole market. It got questionable, and they came out and said no more onion futures ever, based off of the Onion Futures Act.
Because they were hoarding them. They were bad, because onions are kind of, you can store them in a cold, dark cellar for a long time. It's a wild Wikipedia read. For me, before I get to mine, we want to offer Bitcoin at some point, but the future hasn't been super liquid. We think it's because people the buyers want to hold on to their Bitcoin. It's a whole thing. But if I'm going to bring it back, I can't remember if this got eliminated with the Onion Futures Act, but they used to have box office futures.
It did. It's part of the Onion Futures Act.
Okay. I'm sure there's all sorts of tomfoolery to win at that, but basically you could buy or short futures on movie box office results. Now, if you know anything about the accounting that goes into movies these days, you can see why they got banned, because I'm sure somehow everyone was taking a huge write-off. But you know what? Bring it back. How much fun would it be to say it's
I feel like there's got to be an opportunity in Vegas on this one.
Oh, there are. I don't. There probably are, the same way you can bet on politics, but I would imagine the big caveat is, well, the place is they're definitely not US based. But the limits are probably super low. The same way that you can bet on the color of the Gatorade in Vegas that someone's going to pour it on, or you can bet on professional wrestling, but they're sure as hell not going to let you bet all you want, because some sharp out there, it's not like an unknowable thing what color the Gatorade is, right? Somebody knows it, and they could just completely, it would be pretty easy to do.
Well, mate, what's fun are the odds when they come out with the odds on it too. 72% chance it's going to be red this year.
Yeah.
Well, how do we know that?
Oh, they're just trying to get you in the door with those.
They get me every year.
Yeah, there you go.
You can actually bet on the color of Gatorade.
Oh yeah, in the Super Bowl, that's always a big prop bet, is what color is the Gatorade that gets poured on the winning coach.
And the over-under on the national anthem time. How long's the national anthem going to take? And then you'll hear insider talk about, well, I watched the preparation of the national anthem this year. They got to this. And then they'll hang on one word while singing it. And then you'll hear them talk about that for hours.
Yeah. Well, I was involved with a crazy one of those one year where I think that the singer repeated the last line or something like that at the end. Anyway, that's why I don't do that anymore. I'm sure it's fascinating to everyone, but you know what? Risk management.
I didn't even know you could bet on that kind of stuff.
Oh, you can bet. I'll show you some stuff you can bet on, Hogue. All right. Well, that's probably a good place for us to end this week. We'll give you more of our betting advice on Gatorade some other time. Dan, you got a quote to close with?
I do. Hogue, it comes from Mark Douglas. If you can learn to create a state of mind that is not affected by the market's behavior, the struggle will cease to exist. I thought that was pretty good.
It is good.
That's good. Well, hope everything's going good with you all. We'll be back next week with a new episode. Until then, Hogue, what should they do?
You should be patient and trade well. Have a good day, everyone.